Hello, everyone. James here with this week's Hold on. I have to take that off. So yes, I'm quarantined. And yes, we may talk a little bit about my friend Ben Franklin here, who also had the mask on. But this is James with this week's Morin Mortgage Minute. And I'm lucky enough to have Christina Sandville, who is one of the secondary analysts on our team and our resident economist. She has her master's degree from University of Connecticut and is one of the smartest people at UConn. So everyone say hello, or Christina, say hello to everyone out there.
Hi, everyone. Thank you, James, for that introduction.
You got it. So I showed everyone here, and I'm reading Christina's Rate Roundup, your blog that you do for us. And I was reading this week's version, and as I'm looking through everything, I see interest rates. Where are they? They're really low, but the future is uncertain. And there's so much uncertainty in the marketplace right now that as I start reading through, I see unprecedented, I see pandemic, uncharted territory, chaos, devastation, uncertainty, volatility, fluctuation, pinballs, change. What is going on out there with interest rates? And is this all COVID related or what's going on? And I guess we'll circle around to some good news here, but is now a good time to refinance? Can I squish out one question?
Absolutely. Rates are at all-time lows. I mean, we haven't seen rates this low since, the financial crisis back in 08 through about 2010. So now is absolutely a great time to refinance. Most of the movement that we're seeing is COVID related. So as, we kind of watch those numbers, we could see rates fluctuate. We have seen some crazy intraday movement, but I don't think that should scare people. Generally, anything where rates go, spike up from day to day has to do with what's going on with COVID. If the stock market responds well to maybe the jobs report or anything like that, you might see rates jump up a bit. But for the most part, they're staying really low and will likely continue to do so even as we start recovering from the pandemic.
So as I was reading through this and as I'm seeing, it kind of sounds like as sad as it is, the better the news related to COVID is going to be, the worse it's going to be for interest rates, right? They're sort of going in the opposite direction. So rates are really low right now, which means unfortunately we're still dealing with the pandemic. But would you recommend people that are looking to buy or refinance to get in now, or should they wait and see what happens with the pandemic and everything related to COVID-19?
There's certainly no time like the present. If anyone's waiting, it's one of those things where if you enter the process now, get, locked in with a certain rate, you're probably not going to see a huge decrease. I mean, rates might slip a little bit, but you're probably still going to be pretty happy with where you end up. And even if they do go down a little more, you're not going to lose sleep over, a few basis points here and there. If anything, as we go, hopefully things will start to get better and we'll likely see rates, gradually increase. So like I said, no time like the present. Might as well get in kind of on the ground floor before things really start improving.
Absolutely. There was one thing that I noticed in your blog that not a lot of people are talking about that sort of slipped under the radar somehow, some way, but this June 8th number, does that mean what does that date mean to you? And why have we not heard more people talking about it?
Yeah, so that's when it was announced that we entered into a recession. We entered into the recession back in February, and everyone's kind of keeping it quiet. I don't know if they, want to kind of temper expectations and maybe not make things sound any worse or more chaotic than they are, because we do have to remember that recessions are a natural part of the business cycle. What goes up kind of must come down again. So I don't think it's anything to be too concerned about, but I think it does warrant a little more attention than maybe it has gotten to this point.
So somehow the fact that we're in a recession has slipped the news, but somehow everyone hears about this Federal Reserve rate and that being zero. Mm-hmm. What is that? Why aren't interest rates zero if the Fed rate is at zero?
Yeah, absolutely. So everyone is obsessed with the Fed funds rate number right now. which doesn't really have too much to do with what we're talking about or what we deal with on a day-to-day basis, which is mortgage rates. The Fed funds rate is basically the rates which big banks and huge financial institutions borrow money overnight from the Federal Reserve. So we're talking very, very short term. We're talking a lifespan of a matter of hours for interest rates, whereas when you and I talk about mortgage rates, those are much more long term. We're talking, 10 years or more to maturity. So it's totally different, apples to oranges. But people hear, oh, Fed funds rate is at 0. That means I should be getting, next to nothing on my mortgage. When it's like, not quite. Rates are still really low, but we aren't ever going to see, 0 mortgage rates.
Yeah. So the note rate, so if that's not the note rates that borrowers are getting, what controls or what factors go into that? What things do you focus on that really is a good indicator of where interest rates are going?
Yeah, absolutely. So one of the things that we track, even, back in my function as a secondary analyst, we're always watching the market. Specifically, we'll take a look and see what the 10-year treasury yield is doing, because that tracks really closely with mortgage rates. So we keep an eye on that, and that's a big determining factor as to what mortgage rates are doing. We're also seeing the Federal Reserve purchase mortgage-backed securities, and that's really helping to keep interest rates low as well. So last week when the Fed committed to, continuing to buy about 40 billion in mortgage-backed securities a month, rates responded really well to that. So that's what's really going into where mortgage rates are at this point in time.
So you had mentioned that. So we love the certainty that the Fed is going to keep buying interest rates. Mm-hmm. But there was a big shift last week. There was a day, I want to say it was Thursday of last week, that we saw a little bit of a spike. And I know there was a drop off in stocks and everything else. What happened there? What was going on that day?
Yeah, so I think what you're referring to is the jobs report. The jobs report came out and had really surprising numbers. Everyone thought that it would continue, we would see unemployment rate continue to go up, but it actually did the opposite. And the jobs report from the Bureau of Labor Statistics reported that we actually added some jobs to the economy in the month prior. So that was really surprising news. And the stock market responded really favorably to that. So we saw the stock market kind of rally, and as a result, interest rates kind of went up a little bit.
Yeah. Well, the good news for me and for all of our borrowers and customers are that we have such smart people working in our capital markets department and watching out for all this stuff. But when push comes to shove, if interest rates are really low, why wouldn't borrowers call us? Or if they were thinking about purchasing, why not take advantage of now? Like, I don't want to ask you to be the Fed chair, but where are interest rates going? Like, what are we doing here? And why would anyone wait if they're at historic lows like they are right now?
Yeah, that's a really good question. And I wish I had the answer. But yeah, rates are really low. It's a great time to buy. It's a great time to refinance. Even in the lock requests that we've been getting in, we have been seeing an uptick in purchase loans. So that is really promising. Yep. And the refinances continue to roll in. So I think, I would maybe encourage people, don't wait. If you're thinking about it, at least take a look into it, get the ball rolling. You don't, have to lock right now. You can wait a few days if you're unsure, but they're really, strike while the iron is hot, so to speak.
Exactly. And you had mentioned some of our lock desk statistics and having an uptick again in purchase, because we were so inundated with refinances, but we've seen so many people that they're actually reducing their term. We're seeing a lot of 15-year fixed locks, people coming in, they're taking advantage, they're getting interest rates in the 2%, and it's just, it's been really, really great. So, well, thank you so much. I encourage anyone out there, if you're considering buying, if you're thinking about doing it, call one of our loan officers, one of our licensed professionals. They can answer all of your questions, rate related. They have all the resources and are knowledgeable themselves, but they still have our capital markets department and our resident economist over here, Christina, to fall back on to get questions and answers from. So please, if you're thinking about buying or refinancing, call us today. There's no time like the present. I will make sure somewhere on this video we put links to our online applications and phone numbers so you can call to talk to one of our professionals. Thank you, Christina, and At what point can I get rid of all these masks that I have to carry around? I've been carrying masks around with me everywhere I go. Is that going to stop anytime soon?
I think it's going to be a while.
All right. Thank you so much, Christina. I appreciate you taking a little time for me today.
Yeah, thank you.